Good morning. Good morning, good morning. I don't know who's here. I never do. But two of you are. Hello, two of you. Guys, I keep getting this rando commenting on my stuff that it's so good and I deserve more views. And he's right. It is so good and I do deserve more views. But he commented on my Algebra 2 or Algebra 1, I don't remember, math video this week. Useful. Very useful information. And then also commented on the 1.5 minute episode that my stuff was all wonky that I had to upload later. So I kept it up because I want, I want the traffic. But if that guy's watching, comment on my actual videos, please, sir. Or madam. Tom on Facebook or on YouTube, but I don't know if it's a Tom from Facebook because that's the guy. Oops. Or was that the MySpace guy? I don't know. You guys, good morning. Today we're talking about insurance. And I'm just talking to myself mostly, but that's okay. Good morning, Lauren. See, not just me. We're good. All right, today we're talking about insurance. Now, insurance is a scary thing for me to talk to you about. Not quite as scary as mental health was yesterday, but I know more about mental health than I do about insurance. So this took a lot of investigation on my part, and I think I understand it. And if I didn't understand it, I would love somebody who knows insurance to correct me, because I'm doing this as somebody who doesn't know. I even texted my friend Athena, who works for Allstate, to be like, hey, what do you wish people knew when they, what corrections do you have to say a lot? And she said things that would already make sense if you knew the vocab. So today we're talking about the vocab behind insurance, the different types of insurance, what everything means. We'll look at a little bit, and I'll tell you some specific things about insurance. So let's just jump right in. There are 4 main types of insurance. These are the common ones. Health insurance is what helps you pay for doctor bills. Home insurance helps you pay if your house gets robbed or burnt down, something like that. If a tree crashes into it, if you live out in the country. I wish. I have a giant tree that might, but I don't think it would hurt me. Knock on wood. Life insurance, which I'm not going to talk at all about because I'm only 30 and I don't know anything about it, even though I probably should. And auto insurance, or car, boat, motorcycle, all that kind of stuff. But we'll just talk about cars specifically. So those are the 4 main types of insurance. What is insurance? Insurance is a company whom you pay a certain amount, and what that company does is it pools all the money together. And then if something were to happen to you or your car or your house, your insurance helps you pay for it some of the time. Sometimes they don't. Insurance companies also make better deals for you on certain things. So we'll talk about those. And so if something happens, you file a claim, and the insurance company will say, yeah, we'll totally help you with that. And then they help you with it. And then maybe you have to pay a little bit more next time, but it's okay. So I'm going to switch between talking about car insurance and health insurance, and I'll throw in a little bit of home insurance. But for the most part, health and life insurance are right around the same thing, and then home and auto insurance are right around the same thing. So if something applies to home insurance, it also probably applies to auto insurance. So you can just assume that is true. I'm not centered. Okay, so let's do some information. The premium is how much you pay per month or per year. Usually it's per month. What the premium is it'll say, hey, you owe us this much every month. And you're like, cool, that's my amount that I'm putting into your company, so that way you can help people who get hurt. It might be me, it might not be me. But the goal is that if enough people are insured and paying into this pot of money, then the more the company has to offer when something happens. It's basically like everybody helping each other out. But, sometimes the companies win still. Okay. The policy limit is the maximum you pay until the insurance kicks in and pays everything else. Okay. Now, I'm going to have like a little diagram for this because it gets kind of confusing. Because there's also this thing called a deductible, which is the amount you pay until the insurance starts helping you. But I want to go back to the policy limit. No, I want to go back. Let's start fresh. I want to go back to the premium. So for the premium, it's your monthly cost. Now, the insurer, is going to judge you to decide how much you might cost them in the future. Okay? If you are, let's talk about car insurance. If you have a fairly inexpensive sedan and a clean driving record, no accidents, no nothing, then you'll probably be charged less by the insurance company than someone who has a ton of fancy cars and a history of reckless driving. Okay, so speeding tickets, crashes, all that kind of stuff. So what the thing is that they're going to judge you and they're going to say, hey, you probably won't cost us a lot in the future, so we're not going to charge you a lot now. You're good. And then let's say that changes and you start getting into accidents or you buy more and more cars, then you might be charged more with your car insurance. There are many car insurance companies. I'm sure you've heard of the commercials. So there's many different places to get car insurance. I have to just check that I'm still here. Good. And that's the same thing with your health. If you have, or your home, if you have a history of things being stolen from you, you're probably not a very safe person. Or maybe you don't live in a very safe place. So they might charge you more depending on what the risk is to the company. Okay. Let's go back to policy limit. There we go. It not only switched it on the thing, it also made my my notes over here go down a whole page. So, no, I want to go to deductible. Okay, so your policy limit, let's talk about Jane. So here's Jane. Jane at the top, Jane's plan deductible is, I didn't make this, by the way. I got this from the HSA, HCA PEB Health Plan comparison tool. It's one of their definitions, and I kind of liked it, so I'm just going to use it. I do quote them at the end, though, if that helps. Okay, so Jane's plan deductible is $1,500. Her co-insurance is 20%, and her out-of-pocket limit is $5,000. So in January, when this plan starts, Jane goes to the doctor. Her office visit is $125, and she pays all of it. Now, what she pays isn't what the doctor's office costs, because she went in network. All the insurance companies have a network where this is for health insurance specifically over here, where they're like, hey, Dr. Buddy, do you mind giving my people a discount if we send them your way? Great, let's do it. So maybe her doctor's appointment was actually $200, but she got cut a deal because she was with this insurance company, and she only paid $125. The insurance company didn't pay anything yet. They just helped her out with the cost in terms of lowering a little bit. All right, let's say she goes after a couple more times and she ends up paying the $1,500. Now, her monthly payments don't count towards this. Her monthly payments and her premiums, right? We're going to use our fancy words. Don't count for this. What does count is like any bills, surgery, lab tests, CAT scans, anesthesia, um, pacemakers, all those things. Okay, those all count towards the deductible. So she hits $1,500 and her co-insurance helps. So now anytime she goes to the doctor, she pays 20% and her plan pays 80%. Okay. So if it's same doctor, still $125 to go visit the doctor, she's going to pay $25 and then the insurance plan's going to pay $100. So they split it 20-80. And that depends on the plan, but that seems pretty likely to see, or that I've seen. All right, October. Man, she had a rough summer. Maybe she broke her arm or something. She reaches that $5,000 out-of-pocket limit. From now until the end of the year, December 31st, her insurance will pay everything else. Because she paid high enough that they're like, I got your back. You showed us that you paid. The reason they do this is so that way, it for everything. This is for auto, home, life, everything. This system of having a deductible stops people from doing small claims. Okay, so if I have to pay $125 every time I go to the doctor, maybe I won't go to the doctor for my cough. Okay, maybe I'll wait until I have a fever too. Too soon, it's coronavirus time, but you know what I mean, right? Like maybe my finger hurts, or maybe it looks broken. I'm not going to go to the doctor if my finger hurts unless it's been a while, but I am going to go if it's broken. Okay. If the health insurance companies paid 100% of the time, you would go for everything. There are insurances like that. When I was growing up, it was like that because my parents work for Microsoft and they have super good insurance. But that's not an option anymore when I'm a teacher. I don't get that option. But that's what a deductible versus out-of-pocket limit is. Okay, hopefully that helped you as much as it helped me. So, when you're looking for a policy, this might be too soon for this, but we'll try anyways. When you're looking for a policy, this is a comparison tool. These are 3 options that I can have. I have, I think, 9 total options as a teacher in Snohomish County, which is where I live and not where I work. So I picked 3 of them, and it'll tell us some information about all this stuff. So it's way too much, and I actually cut it down a lot. But at the top, it has a medical deductible. So that's how much I pay until the insurance helps. And my out-of-pocket limit varies here too. And then there are some differences here. Like the left one will have some prescription drug deductibles, and then the middle one has nothing. And then the third one, it counts towards my medical deductible. So if I know that I have medicine that I take for every month, maybe I have depression medicine, or maybe I have birth control, then I would want something that helps me, helps pay for it towards that. I don't want to be paying the $100 per person deductible. And then I also added the 3 things that I check when I'm looking. If there's 2 insurance companies that are basically the same, I have glasses. So I need a free annual exam, and I would like to be able to pay for frames. I'd like to have help for that. So this one, all 3 are the same in terms of the frames. Any amount over $150 for frames every 2 years it is what I pay for. So they pay for $150 every 2 years. So I can't go back and get new glasses until next year. But the second 2 are the ones that have a $0 vision care. So I can go and get my eyes checked once a year, which is nice. And then I also kind of look at spinal manipulations. This is like chiropractor stuff. So one of them has a $15 copay, and the other ones have 15% that I pay. And then I can only go 10 times a year. I don't use this as often as I should. I really need to, because I think this is part of my plan. And this is just a snapshot. Like, it's not the entire plan. It's not all of this stuff, but it is there. So, if you are, guys, I don't know all this off the top of my head, so I have like a whole page of the stuff that I borrowed borrowed from. If you're mostly healthy, so this is from Cigna.com. If you're mostly healthy and don't expect to need medical services that cost a lot. So if I'm mostly healthy, I'm in good shape, I haven't hurt myself or gotten sick for a while, I want something with a higher deductible and a lower premium. Okay? That means I pay less a month, but I have to pay more if I do happen to get hurt. Okay? On the other hand, if I have an active family and all my kids play sports, or I have a medical condition that will need care, I'm going to need a lower deductible and a higher premium. Okay? Those are my goals. That means that I pay more every month, but I'll have a lower cap before they start helping me. Okay? So that's the difference there. I used to think that a high deductible was a good thing, so I got myself in trouble one year. I was like, when does this stuff kick in? Well, you picked a very high deductible. You don't want that. Okay. Okay, let's go back to talking about different kinds of health insurance, or of insurance. So that was a lot about health insurance and a little bit about car insurance. Let's talk about house insurance. Home. I don't own a home, but I do have renter's insurance. And the kind of cool thing about renter's insurance is that your auto company, insurance company, will frequently bundle in the home or the renter's insurance to together, so that way you pay a little bit less for both, which is kind of nice. So if you spread out all of your insurance over many companies, might be paying a little bit more. You also can pay for more at a time. So I could pay for my auto every 6 months, but that's a lot of money every 6 months, and so what I do is I pay it every month instead, and it's a little bit more to do that, but I don't have the robust savings, and it hurts me every time I have to pull out that much money, so I just do it every month. By the way, I pay $156 a month for my car, which is a new car, so it's a little bit higher than it was before, and I pay $12.34, 1, 2, 3, 4, every month for my renter's insurance. So let's talk about renter's insurance. Let's say you're a college student living off campus, you probably have some sort of computer, laptop, something. You probably have maybe some jewelry or maybe a video game console. It's not a lot, and so you're probably looking at $100 a year to pay for that. Don't forget to upgrade though as you keep upgrading. It's you really want to pick the coverage that will protect your assets now and in the future. And this is actually a direct quote from my friend Athena, who works for Allstate. She says, people always think their things are not expensive or important until you need to buy everything again all at once, and it adds up quickly. So if, let's say, I'm going to knock on wood a lot today. Let's say my home got broken into, and they took, so I have, let's see, I shouldn't say also online. I have 3 gaming consoles, 2 computers, 3 computers. One of them's from school. But also my couch, my books and games, my videos, all of that is just easily, maybe not the couch, but everything's kind of easily just tossed into a bag and taken out the door. If they go farther into our house, maybe they'll find some of my jewelry that I have. Okay. If I'm going to replace all of that at once, it's going to be crazy high, right? So my insurance covers me for a certain amount of assets, and if that were to happen, then my insurance would say, hey, you pay for this much of the stuff, we'll take it from here, or we'll help you pay for the rest, right? So you really want to, when you sign up for insurance, is you want to make an itemized list of your house. What gaming consoles do you have? How many DVDs do you have? If you really want to go through and write down what of each type there are, what videos there are. Nobody has DVDs anymore, I know, but I'm old school. Your printer, any craft things that I have. Like I have a silhouette. That's all stuff that I actually really should sit down and write down just in case. Just in case. But then that same system applies. I pay for a little bit until my deductible hits. They help me until we reach my maximum, and then they help me or they do the rest. But insurance companies don't want to do that, right? What they want is they want you to pay them and then not have to claim anything, because then they use your money for somebody else. And so what? Yeah, they're good. So if you don't have anything written down, and I would actually even add like the electronic code. There's a name for that, but if you don't add that kind of stuff on there, maybe they won't believe you. So you really do need to have a record. And you'll hear a lot about insurance fraud. So sometimes people will say, hey, my house got broken into, and actually like their friend came from up the street and stole all their stuff. And then they get, their friend gets the stuff and they get all the new stuff from the insurance company. Illegal. They catch you. That's like a federal offense. I'm not illegal. I'm not a lawyer. You can't quote me on any of this. But it's not, you don't do that. It's fraud for a reason. Okay. And then I want to say that I'm so sorry that you're a teenager, because insuring a teen is expensive. If you got insurance all by yourself with no parental help, an individual policy for you is $438 a month on average. That's more than buying the car. Not really, but actually, yeah, because you pay that every single month. I pay $156. You would be paying $438. So you better hope that your parents are willing to put you on their policy, because to add a 16-year-old to a policy is an average of $278. That's about half. It's a little bit more than half, but and it's because the insurance company's like, hey, they have somebody that cares about them. They're going to make sure they don't crash their car. But if you're like, hey, I'm a teenager and I'm all by myself and I'm going to pay for this, they're going to be like, you're not worth it. You're going to be in an accident. Because they look at the numbers. They don't care who you are as a person. They look at the numbers and say, hey, teenagers are more likely than adults to get in a car accident. More likely. Also, teenage males are more likely to get in a car accident than teenage females are. So they're going to charge you a little bit more if you're a male. I just got tea all over me. Good thing it's cold now. So it's a little bit more. People who drive red cars are more likely to get in accidents than other colors. Maybe we'll charge them more. And then as a teenager, you don't have credit yet, unless you watched my credit video and got one. You don't have credit yet. So what they do is they use your GPA as your credit as a high schooler. So if you have a high GPA, they might charge you a little bit less, because that shows you're a responsible teenager. Just like credit shows that I'm a responsible adult. Okay. But if you have really low GPA, they're going to bump it up, because that shows you're not as responsible. I know that school we're fighting the system and all that kind of stuff, but they're going to charge you more. So, how do you get cheaper insurance? Higher deductible, because that shows that you will pay less per month but more in the long run if you get in an accident or lose something or get a healthcare emergency. Have better GPA or credit, and don't get in any accidents. By the way, when you're older and can actually drink, if you were to have a DUI, don't do it. Do not drive under the influence. If you get in the car and your head spins a little bit when you turn your head, turn around and go back. Have somebody steal your keys from you. Don't drive under the influence. If you were to get pulled over for speeding, get pulled over for reckless driving, get pulled over for getting in an accident, that's going to add $500 to $1,000 every year to your insurance. On average. It's not worth it. Plus, if you hurt somebody, you're going to be dealing with that for the rest of your life. I'll actually look at the camera when I'm talking to you. I'm going to scroll back through my notes really quick because I want to make sure that I covered everything. And if you have any questions, let me know. I think it's just Lauren right now. I can't tell. No, there's 3 people here. Good morning, all 3 of you. Unless one of them is me, in which case, hello to 2 of you. Good morning to myself as well. I'm allowed. Okay. Healthy, what counts? Did I tell you that premiums don't count towards your deductible? So the amount you pay every month doesn't count towards the amount that they step in after. I think so. Great. I think I got everything. Except, this is my favorite quote. So I made it a thing. My friend Athena, who, by the way, you guys, if you have a friend who works for insurance, just let them handle everything for you. Athena works for Allstate, and I just let her, like, help me out with my stuff. And then I was able to say, you know what, I don't think I need that. She's like, yeah, okay, sounds good. So that was awesome. Okay, so she said to me, you don't have to be a millionaire to be sued like one. So you really do want to cover your own butt with all of this stuff. Because if you get sued like a millionaire, you're bankrupt. And I really just liked that quote. Also, I have got to show you all these sources because I got them from so many places. Investopedia, verywellhealth.com, Cigna.com. Fortress is the place that I got the comparison tool for my stuff. And then insurance.com. These were these were huge to me, being able to share all this with you, because I didn't understand this stuff until I saw Jane. TBH. Okay. This is kind of hard for you to know what questions you have, specifically because you are not quite there yet, you know? So I'm hoping, my main hope is that you find something useful out of this and can watch it later and really get something. Maybe I'll watch it later. Oh, no, I need to tell you something very important. If you're on your parents' insurance, you're on there until you're 26. I've said this already, but I'm going to say it again. The month you turn 26, the end of that month is when your insurance stops working. Okay, nobody told me this. I couldn't go to the doctor. My birthday's in May, okay? June, July, August, September, October, November, December. I had 7 months where I couldn't be sick. It was terrifying. And I fought my work because so your work is usually where you get your insurance through. I don't even know how to get insurance other than through work. That's something I should know. Health insurance specifically. So your work, my work was like, oh yeah, just fill out this form. And they were like, oh, it's denied. you told me to fill it out and then you're denying it. I was so grumpy. But anyways, I digress. You can sign up for insurance starting in November-ish of the year before you get your insurance. So if you start your insurance in January, you sign up for it in November or December. If you miss that window, you don't get insurance again until the next year. So it's very important for you to pick the right insurance for you. And then your work also does dental. So my work requires me to have dental, even if I already have dental. So I have to get it through them. It's fine. And then your work will, I want to say help you pay for it. Part of your contract sometimes is that you have a health insurance and you can have a certain amount of health insurance paid for before you have to start paying for it. So let's say you get $100 worth of your health insurance taken care of. If it's over that, you pay it, but if it's under that, you're just fine. So I get as close to that number as possible worth of health insurance. Low deductibles. Okay, I think that was my story. I can't believe I forgot to write that down in my information document. Okay, and then I'm going to once again plead for ideas for this, you guys, and girls, and friends without gender. I really am running out of ideas. And I kind of want to keep this going because I enjoy talking with you and I enjoy giving you information, but I'm a fully fledged 30-year-old adult. I don't know what you don't know. And I know you don't even know what you don't know. But I checked Reddit and all the ideas that they've given me is what I've already done, except for cooking. And I don't really want to cook at 11 a.m. on a Monday or whatever, but maybe I will. And I'm sure I'll just keep it on, but I do want this to be meaningful. Okay. No questions? I am ready. Athena said I could text her if you have any questions. It's right here. I'm ready. I think we're good then. No, it hasn't shown up with that part yet. My the stream's behind, which is fine. At least I'm only dropping 54% of my frames instead of 60 something. Good gravy. Lexi, office hours. Come to office hours. Okay. You guys, have a beautiful day. And don't forget, let's collect knowledge, like Corvid collects shiny things. I will see you